Ladies and gentlemen, good day and welcome to Carysil Limited Q3 FY23 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Chirag Parekh, Chairman and Managing Director, Carysil Limited. Thank you, and over to you, sir.
Good evening, everyone, and thank you for joining us on Carysil Limited Q3 FY23 earnings conference call. I hope everybody had a chance to review our financial results and investor presentation. We were recently posted on the company's website and stock exchanges. I am accompanied by our CFO, Mr. Anand Sharma, and ICA, our investor relation advisors on this call today. Let me begin by giving an update on the global scenario. The world today is challenged by inflation, resulting in a steep decline in global economic activities. Several factors such as the rising cost of living, challenging financial conditions, Russia's invasion of Ukraine, and presence of the COVID-19 pandemic are hurdles to economic progress. Despite the challenging global economic scenarios, India sails through the tough times. Shining through dark times, India emerges as the highest growing economy in the world. Understanding the potential of the Indian economy and the growing demand for the quartz zinc, we have built up sufficient production capacity to satisfy the steadily increasing demand in the domestic markets. In our previous earnings call, we informed you that our sales channel carried high inventory during COVID-19 period. We are receiving feedback from major customers that the de-stocking happening is quite successful and gradually reaching towards the optimum levels. We have started to receive good orders for our quartz zinc from the US and UK markets, etc. We foresee the macro demand of our quartz zinc to return soon on quarter-on-quarter basis. While we witness a positive rebound in our US and UK markets, Europe lags due to rising cost and inflation. As a testimony to improving demand in UK, our UK subsidiaries have excelled in delivering strong business performance. The ongoing inflation, energy crisis, and cost escalation in Europe presented us an opportunity to bridge the supply gap, which will ultimately lead to an expansion of our customer base across the globe. We are already in discussion with few of the customers for their future requirements. While demand in global markets is in its recovery phase, we are enhancing our focus on the growing demand in the domestic and the emerging markets around the world and aggressively ramping up our distribution and dealer network. Aiming to grow our institutional sales in domestic market, we hired a new team to focus on this vertical. We have already started supplying to mega projects and reputed builders, exploring the possibility of collaboration with them for upcoming projects as well. Recently, we acquired 60,000 square meters of land near existing plants in Bhavnagar, Gujarat. The acquired land will play a critical role in our aggressive future expansion and new projects plan. Additionally, we have increased the capacity of our stainless steel zinc manufacturing unit from 90,000 zinc to 180,000 zinc, and commercial production expected to begin from March 23. These steel zinc will be manufactured in the form of press and hand fabricated and PVD zincs. We are currently exporting PVD zinc to UK, France, and Germany. Good demand for PVD zinc from export customers is a positive indicator of future growth. The PVD technology has aesthetic value by coating in different metallic colors like gold, rose gold, black, etc. to the steel zinc, which are available until now were only in natural steel color. The prices of the PVD are higher than the prices of the handmade and the quartz zinc, consequently contributing to higher valuation and revenue. Now, let me give you an update on our built-in appliances and faucets division. As we had outlined earlier in our previous quarter, we have started execution of project by ordering machines for setting up manufacturing assembly line of building appliances. We are of the opinion that there is lots of scope for us to expand our supply in domestic markets, and hence our manufactured appliances will give us tremendous opportunity to increase our geographical reach across the country, as well as gain a very competitive edge in terms of cost. Our faucet assembly line of 100,000 faucets are starting on a pilot basis. Will get full-fledged commercial production Q1 FY23 onwards. Within this segment, we will stick to our core philosophy of innovation and delivering highest quality product. Therefore, we envisage the margins in built-in appliances business to be similar levels as of our consolidated businesses, which will be one of the two key drivers growth in years to come. Incorporation of a wholly owned subsidiary in Dubai, UAE. We are proposing to incorporate a wholly owned subsidiary in Dubai, UAE to cater the GCC market, focusing on the sale of the kitchenware products. We are planning to open an exclusive showroom and display of our products at a prominent place across, along with the warehouse FTZ Dubai. This is in connection with the success what we had at the Big Five exhibition in Dubai a few months back. The rationale behind incorporating a subsidiary in Dubai and as focus on the built-in appliances is to leverage on the brand Carysil globally and increase foothold in new and emerging markets, especially the GCC market, where Saudi Arabia is expected to be the next big potential market in the GCC. B, it is a complementary product for us, will help us to improve our wallet share with existing customers and at the same time help us to acquire new customers by providing a complete bouquet of kitchen solutions. New product introduction and exhibitions. We have introduced a super strength sink Super X, which has approximately 50% more strength than our regular quad sink which is available in the world. This type of sink requires minimal packaging and increased loading ability in containers, thus will result into cost savings in packing and freight, adding to improvement in margins. Further, we have also started manufacturing of green sinks and launched the same in one of the key markets recently in US KBS exhibition. The initial response from our customers has been overwhelming and encouraging, with the confidence key to aim for eco-friendly and more sustainable growth future. We also showcased the Super X green PVD sinks in France, Dubai and the KBS Las Vegas exhibition. It has been highly appreciated by our customers and visitors. We also successfully launched the Stone product range in the Kitchen and Bath International Show in Las Vegas last month, and we have received a lot of appreciation of its luxurious and aesthetic value. Overall, outlook Q4 FY23 looks positive. However, we will get more clarity after Q4. Now I would like to hand over call to our CFO, Mr. Anand Sharma, to update you on the company's financial performance. Thank you.
Thank you, sir. Good evening, everyone. Let me take you through the consolidated financial performance of the company. Q3 FY23 performance. Consolidated total income stood at 138 crore in Q3 FY13 as compared to 128 crore in Q2 FY22, a growth of 8%. EBITDA of the company stood at 25 crore in Q3 FY23 as compared to corresponding last year quarter of 31 crore, degrowth of 19%. Profit after tax and minority interest for the quarter stood at 12 crore in Q3 FY23 as compared to rupees 17 crore of Q3 FY22, degrowth of 30%. 9 months FY23 performance. Consolidated total income stood at 448 crore in 9 months FY23 as compared to 345 crore in 9 months FY22, a growth of 30%. EBITDA of the company stood at 82 crore in 9 months FY23 as compared to 84 crore of last year 9 months FY22, marginal degrowth of 2%. Profit after tax and minority interest stood at 40 crore as compared to 48 crore in last year 9 months FY22. Sales volume for quad sink in 9 months FY23 stood at 4,01,466 units as compared to 4,76,659 in last year 9 months FY22, and this is lower by 16%. Stainless steel swing for this 9-month FY23 stood at 81,185 units as compared to 73,092 in last year's 9-month period, that is higher by 11%. Kitchen appliances in 9-month FY23 stood at 21,957 units as compared to 15,112 in last year's 9-month period, that is higher by 45%. Thank you. Now I open the floor for questions and answers. Over to you, operator.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The first question is from the line of Jensen Jacob from Centra Advisors. Please go ahead.
Thank you for taking my question. In the last call, you had mentioned that you have enough plan to add 500,000 more in capacity for cord sinks, in addition to the 1 million capacity.
Sorry to interrupt you, Mr. Jacob. The audio is muffled from your line. Please use the handset mode.
Am I audible now?
Yes, sir.
Yes.
In the last call, you had mentioned that you have enough plan to add up to 1.5 million capacity in cord sinks. But in the recent land acquisition announcement, you disclosed that the existing capacity has been fully utilized. Can you please throw some light on this?
So I think we have never said that we are doing 1.5 million capacity, so that's number one. We also mentioned that we expanded to 1.2 million capacity, where 1 million capacity was installed and further 200,000 units were going to be expanded. And the last quarter we had clarified that because of this global recession, we're going to use this 200,000 kitchen sink capacity into manufacturing faucets and kitchen hoods.
Okay. A follow-up to that, do you plan on utilizing the newly acquired land for cord sinks or other segments?
So the opportunities are exciting. We have some. We are exploring in which category, but it could be across the categories from from faucets, hoods, or to the ceramics to the kitchen surfaces. So we are based on what we are able to make the deals with our potential customers, and based on that we will be able to sort this out. And like we had always said, that the UK acquisitions or any acquisition what we do, we eventually will do a backward integration on it and try to substitute sourcing from the other countries to India. So yes, opportunities are there. We're just exploring at this point what we will do.
Understood. That's all from my side. Thanks.
Thank you. The next question is from the line of Udit Gajiwala from Yes Securities. Please go ahead.
Hi, sir. Thank you for the opportunity. The first, if you can throw some light on, how does Q4 look like, given that,
Sorry to interrupt you. The audio is breaking from your line, sir. Please check.
Yeah. Am I audible now?
Yes, sir. Thank you.
Yeah. So just wanted your comments on, the Q4 volume trajectory that you are looking at from the current order book that you might be having.
Yeah. So like we have said, the outlook looks quite positive based on the latest exhibition what we have done, which I was not that confident in the last earnings call, which I had said that the quarter 3 would be probably in line with the quarter 2. I think this is what we achieved it also. Looking at the recent my visits to the customers, and what we are reading is that what we're expecting the U.S. to have a hard crash is probably not happening. The orders of the major markets like UK and US, India, the order booking is quite healthy, is ramping up. So we definitely think that quarter on quarter the volume will improve, but at the same time we are still having this challenging situation. To what level improve, we don't know, but yes, we expect that with what we've been witnessing, that there would be a volume growth on a quarter-on-quarter basis. That's all I can say right now.
Okay, sir. And sir, could you explain, the pricing? Have we taken any price increases in our castings and stainless steel? Because the realization for this quarter looks much higher, just as sequence.
Realization price.
I'm not able to hear the first.
So, your question is that the price realization is better in this quarter, right?
Correct. For both pots and stainless steel.
Yeah. So, because we have introduced some more kind of SKUs, new models, where we have a higher realization, and also in the steel zinc prices has gone up. Input costs have also gone up, consequently prices also gone up. And some mix of our press and quadro zinc, where quadro sales are higher. So value realization is higher in the steel zinc.
Just to add, the exports also started to happen,
yes,
where we have a better price realization.
Understood, sir. And sir, on margin front, if you can throw some light, sequentially we have improved substantially by approx 200 basis points on the consolidated level. What should be the stable margins that we should work with on annual basis or for next couple of years?
I think our margin profile is not changed. It's only the volume which going to drive the margins. Our margin is same what we were getting in the earlier year. So margins profile remain intact. Once the volume growth will happen, margin will improve further.
Thank you. Mr. Gajiwala, may we request that you return to the question queue for follow-up questions. We'll take the next question from the line of Aman Agarwal from Equirus Securities. Please go ahead.
Yeah, thank you for the opportunity, sir. The first question was regarding Carysil Surfaces, our subsidiary. So from the 3Q numbers, it seems that that company has reported good numbers. So just wanted to gauge your understanding or your view on that, the company's operations, the kind of growth we expect from that company, and the kind of margins or margin improvement we see over there.
Of which company was it?
Carysil Surface? No,
are you talking about? We're not able to hear you properly, so.
Silmar, yeah.
Silmar, yeah.
Silmar.
Yeah, Silmar. So I think the good thing has happened, which I said last time, that Silmar, which is now Carysil Surfaces, which has now, we would able to target a lot of new customers in UK. So we've been able to beat our forecast as far as the surfaces are concerned. Also, we have seen a margin improvement, and we'll see a further margin improvement in Silmar, is because during the COVID times, the input costs have gone high and we'd increased the prices. And now with the slowdown, the prices of freight and input costs are coming back to the pre-pandemic levels. So there will be a margin improvement.
So, just understanding more on that company, is there any, like we see for the pot sinks and the steel sinks, there's been an impact from European Union slowdown. Has the same impacted that company also in terms of demand?
No, so I think we have clarified in investors' presentation. Yeah, the sales. The sales have increased.
Yes, sir. Okay, he's asking because the cost slowdown is impacting the surface also.
Surfaces has not been affected because there was no destocking happening from the surfaces side, because 99% of the orders are based on the actual orders by the customers.
So make to order, more of the make to order.
Make to order and based on.
Sure, sir. Understood. And sir, secondly, on the appliance side, we seem to be going big on the appliances business with our new subsidiary also coming in Dubai. So, with the existing market being already competitive, how do you explain our right to win in this segment?
So I think which we have mentioned that our emphasis is going to be on the kitchen built-in appliances. And primarily will be focusing on the kitchen hoods and hobs. So we have hired the new engineers from a very reputed institution like IIT, and we are planning to do the complete new innovation kind of kitchen hoods and hobs, which will give us a much better competitive edge in the market. So that's number one. Number two is, well, like I said, we never focus much on the built-in appliances. And while you have seen the 9-month number have grown by 45% from 15,000 to 22,000 numbers. So we are recruiting the whole new team for India for the built-in appliances purposes. We've been able to crack some very good people, because people eventually going to drive the built-in appliances. So we'll be expanding our sales channels across, and while we'll be doing a lot of innovation, and like we said, we were going to do our in-house assembling and manufacturing, which will give us a much better competitive edge than the competitors. So we are very bullish on the kitchen hoods and the hobs category.
Thank you. Mr. Agarwal, may we request that you return to the question queue for follow-up questions. The next question is from the line of Nikhil Gada from Abax AMC. Please go ahead.
Hi, sir. Thanks for the opportunity, and congrats on a decent set of numbers, in such kind of difficult times. So my first question is, when I look at the domestic numbers, while you say that the focus has, remains there and we are trying to expand, our channel and penetration level, in 3Q, we see that the growth has been sort of flattish, and we are already on a lower base. So, can you highlight, are we seeing some amount of demand slowdown in the domestic markets as well?
No, so I think, to be fair, exactly there's a problem happened with a lot of backlog and de-stocking happening at the domestic side also. Where we had a huge backlog during the COVID level times. So there were de-stocking happening now, which is going. As far as the demand is concerned on the secondary sales side is much higher than we have on the primary side. So which is a very good sign. You'll see that changing in Q4.
Yeah, because, we are consistently adding new dealers, and I'm assuming that once
No, correct. So I think there was a more issue with the de-stocking in the primary sales.
And just to add on this, Nikhil, because of this Diwali season and all, the stock are built up in the Q2, and that get clear in the Q3. So that's the main reason.
Yeah, but you'll be able to see quite a big difference in Q4.
Just on follow-up to that, you mentioned in your opening commentary about this mega builders that you are targeting, and I think this is sort of a new channel that you are also trying to sort of address to. So can you give some qualitative comments on, what the target, you are planning from this sort of a channel over the next 1 or 2 years?
Yeah, sure. So I can just give you, so I think the first initiative which we want, right now our project sales are approximately 20% of our total sales. So, and with the incremental growth, what we expect, we expect the granite sink and the steel sink in the next 3 years to double the quantity of that, and which we feel that 50%, 40 to 50% of that can come from projects. So I think it's very important that we have a separate B2B team just for tapping the architect, interiors and the builders, and which we are doing it.
So when you say project sales, 20% of domestic sales, right?
Yes. Yeah, 20% domestic sales, which we see a potential next 3 years to double this quantity. And out of doubling this quantity, all the incremental growth, out of which substantial 40 to 50% should come from the builder segment.
So just, sorry, just to, further elaborate.
Mr. Gada, may we request that you return to the question queue for
I just have a follow-up on the same thing, if it's possible.
Yeah, sure. Go on. Yeah.
So just on this project sales itself, what kind of pricing is the pricing going to be lower than what we would sell in the retail market? If so, by how much?
So अभी जो हमारा प्रोजेक्ट है वो जनरली रिटेल मार्केट से अप्रोक्सीमेटली इज अबाउट 15 to 20% lower, right?
Okay, and that is something we will target.
Yeah, so but at the same time we also have the cost-effective method to supply to the builders of a different material and a different packing also. So we'll be kind of almost offsetting that impact of cost.
Got it, sir. Understood. I'll come back in the queue. Yeah, thanks.
Yeah, sure. Thanks.
Thank you. The next question is from the line of Shrinjana Mittal from Ratnatraya Capital. Please go ahead.
Hey, thank you for the opportunity, sir. First question is on the line of channel inventory, sir. So right now, as of this quarter, what would be the channel inventory that we have?
Sorry, I'm sorry. Can you repeat? You're not very audible and clear.
Sorry. So, sir, I was asking that what is the channel inventory right now? How many months of inventory do we have as of now?
Yeah, so I think, like I said, the least stocking is almost over now. So the normal levels of 2 month inventory which the distributor keeps, which is there now.
Okay. So we have we have reached the normal months of inventory. Okay.
We have normalcy as far as the destocking is concerned in India.
Right. Okay. And also on the export side, correct?
Yes, export side with major customers. Yes, with major customers.
Okay. Also, one more question on the UK subsidiary. So, the UK subsidiary, I just wanted to understand. So, how many months of inventory does the UK subsidiary hold? The one that primarily just sells in the UK market.
So, as far as the Carysil products is concerned, which is a normal, mainly distribution of kitchen sinks and taps, approximately 45 days. And as far as the surfaces are concerned, it's completely made to order.
Okay, surfaces are made to order.
So only the inventory could be on the work in process. If there are some challenging jobs, then that inventory can go maybe more than 30 days. Yeah.
Okay, understood, sir. Thank you.
Thank you. The next question is from the line of Harsh Chanwal from Centrum Portfolio Management Services. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, I want to check with you on any update on any new partnerships that we have signed or we are, in process of signing with global retail giants.
Thank you for the question. I was waiting why nobody asked me that. But yeah, so I think I had mentioned in my last time that there is a lot of opportunity for our company which we are targeting at this point due to the higher manufacturing cost by our European competitors, especially Germany. And somebody also had asked last time, now the price difference used to be 20, now it's about 35%, and it brings a lot of opportunity for us on the table. While I say that, I would try to avoid any kind of futuristic thing, but all I can say is that we have few advanced discussions happening with some of the very key players in the world, and it is just and we just hope that we are quite positive that this could soon materialize.
As a follow-up to that, so we have already signed with IKEA 2 years back, and we have a very good relationship and good track record with them. So during this last quarter, where your competitors had increased cost of manufacturing, did we see higher offtake or higher wallet share with IKEA?
Yeah, so I think you're asking a very key question. I think we had a last week visit from a global IKEA sales supply chain team, especially the purchase team, the global team had come to see our factory, and this was exactly our question, that you have experienced the higher cost with the other competitors, and why are we not getting a larger wallet share? And to gain this major wallet share from us, and that's why the team was here, and to see that, that how is Carysil as a partner. I think they went with a lot of positive feedback. That's all I can tell you. We await from a response from that side. But I think they went with quite a bit of a positive feedback, and we hope that we get the same feedback and be able to increase our wallet share with them.
Got it. And the last question was, our intention or evaluation of getting into ceramic industry. So, sir, we are operating in a very niche segment, which is our business is very profitable. So, what is rational to look at ceramics where it's generally very competitive, and it may not be able to make a similar kind of return profile?
Yeah, I mean I think that's depend upon the company's strategy. You look at about Villeroy & Boch, Duravid, Totos. So their ceramic prices are incredible. I mean, their ceramic prices probably 5 times higher than what the Indian manufacturers are. So it depends where you position your brand and product. As far as we are concerned, we always work with premium segment because we feel that there's a lot of space here. And so any products in ceramic which we are outsourcing currently, we have been positioned at a premium level. So our per piece realization is even much more higher than the quartz products.
Thank you.
Now to just very quickly, we've been now targeting the mid segment of the market with the new FK Sternhagen collection, where we are getting overwhelming response. We are adding 3 more ranges to it. And we will be able to see that is more on a volume-based target segment. What we are doing it mostly builders and also the customers. I think we should be able to now gain a larger volume. But even while I say it is still the per piece price is in comparison with our quartz products. Nothing is lower than that, and even the margins are in comparison with the quartz products.
Thank you. Mr. Chanwal, may we request that you return to the question queue for follow-up questions. We'll take the next question from the line of Varun Arora from Safe Enterprises. Please go ahead.
Yeah, hi. Thanks for the opportunity. So my question is, if I look at quartz zinc contribution and steel zinc contribution, it seems that this year we've seen a higher decline coming from quartz zinc volumes. This is obviously after a very strong increase last year in the quartz zinc. While our steel zinc business seems to be stable this year on year, if you look at 9 months. Yeah. So if you can just give some color as to what you are seeing across the two, why there is a higher decline in quartz zinc this year.
The same thing, but primarily is because of the de-stocking happening with our major export customers, where there is 75% of exports in quartz zinc versus we have only 10% of exports happening in the stainless steel zinc. So India being a more resilient market, there's not been much variation to it, and where the exports have been more challenging times. So that's the reason.
Sure. And sir, but in terms of secondary demand, any color like our quartz zinc, like what's the growth like? Is the difference much lesser in the secondary side when we look at quartz zinc and steel zinc?
Difference in pricing?
Difference in demand, that you're seeing this year. Is it much lesser, at the secondary level?
I'm just clarifying. I've said it before. The flavor for quartz zinc is increasing on a quarter-on-quarter basis. I would say month-on-month basis. So I think that's not going down. We have seen a sharp increase in the demand of the quartz zincs, not only the retail side but also with the builder side. I met few major builders, And the only thing is that there's a price issue, and most of the builders turn away because of the pricing of the product. So we are now trying to work out, like I told one of my friends on the call, that we are working on a separate product material system and a packing system which we can able to offset that with a lower price to the builders. So mostly it has to do with the pricing. If we are able to give the products at the steel sinks, I think everybody's going to buy quad sinks. Most of them will buy the quad sinks. As far as the retail side is concerned, I think we have been seeing on a quarter-on-quarter basis the demand of the quad sinks versus the steel sinks are on an increase.
Thank you. Mr. Arora, may we request that you return to the question queue for follow-up questions. We'll take the next question from the line of Nitin from KIFS Trade Capital. Please go ahead.
Yeah, thanks for taking my question. This existing capacities which we have, so can you tell me what is the maximum revenue potential from each segment wise?
So on the quad sinks, we have a capacity of 1 million sinks, which result to about 600 crores. 550 to 600 crores.
Okay.
As far as the stainless steel sinks are concerned, we are at 90,000, which we are soon expanding to 180,000. It's about 100,000 units will do about 45 to 50 crores, and at 180,000 units, we should be doing around 80 to 90 crores.
Okay. And the third one? Kitchen
Third is the built-in appliances, which will be the taps and the built-in appliances, which we have said.
Hello.
10,000. Was it 10,000 or 100,000 appliances? Go expansion.
Assembly line of starting, which we said of 10,000 taps to start with, right? So 10,000.
June 1 lakh and December 1 lakh.
Appliances on 100,000 units will give a turnover of approximately 80 to 90 crores.
Okay. So that's
the first phase what we are doing at 100,000, so 80 to 90 crores.
Yeah. So based on these three segments, you will be reaching approximately 100 crores max.
Yeah.
Best case scenario. Let's say mota figures. So
that's the Indian sales when we have.
Yeah, but the total capacity, yeah.
Yeah, am I missing something? No.
No, you're okay.
Yeah. So now to your long-term target is to have 1,000. That's the ambitions which you have spelled out. So now to have that balanced 200, you will need to incur certain expenses which you must be on your drawing board stage at this point of time.
Yes.
So what that kind of a capex will be needed?
You see, we are having this AOP budget meeting in March. Okay. So we are right now, like I said, one of my friends, that we are exploring the opportunities where we need to do that. So I think you'll have more clarity by end of March. We can share with you.
Okay. But I presume you will be it has to be margin accretive and lesser payback. That's the internal target you must be keeping benchmark, right?
So I think it's needless to say that Carysil always focuses on the margin, which we see always, and I think you probably would have seen this quarter too. There will be the margin is our core focus for a quarter or something. It may be for a particular project or something or a one-time expense, but generally yes, we always look at keeping our margins intact.
So no, because we need to think little beyond 2 years horizon, because whatever this potential of the existing capacity is, that you'll be definitely hitting 2 years or 3 years max, and anything to plan beyond that we'll need another 6 to 8 quarters to scale it up. So I think there's something which you need to draw. Am I right in thinking that should be something in 6 months you should be out for blueprint beyond 3 years?
Yeah. So like I said, the markets are volatile across the world. While we see definitely a positive outlook, The quarter four, by end of quarter four, we'll be able to map out exactly what's happening, and we're going to give you a much clearer picture by then. So maybe in the next earnings call, you may have more clarity from us. How are we going to do that?
Thank you. Mr. Nitin, may we request that you return to the question queue for follow-up questions. We'll take the next question from the line of CA Garvit Goyal from Invest Research. Please go ahead.
Hello. Good morning, Chirag sir. Thanks for the opportunity. Am I audible clearly?
Yes, audible.
Okay. So considering these energy crises in Europe and the European manufacturers not able to operate their plants there on at the similar cost levels as earlier, you seem positive on the opportunity coming to you, but at the same time, you are saying European demand is not there due to energy crisis, which is reflected in your volume numbers as well, which are Q-on-Q down by approximately 18%. So my question is, number one, whether we can expect volumes to recover in quarter four to the levels of that in quarter one FY23, or these volumes shall recover only once these energy crises get sorted. I'm asking this because if latter is the case, then European competitors will also be able to operate their plants at the earlier cost after that energy crisis gets sorted. So if demand recovers, then supply will also be there. So I'm not understanding how we are going to be benefited, because you mentioned in the earlier course demand is there in the Europe. It's just a matter of channel destocking, which shall get resolved in quarter four, which seems logical that demand is there, but their domestic supplier is not able to make the cost-effective supply, so the demand shall come to us. But if the demand only is not there, then due to energy crisis or inflation, whatever, then there is no question of shifting it from Europe to India. So kindly put some color on that, sir.
Yeah. So I think I would like to clarify. So A is yes, that there is a slackness in the European the economic side. But we also need to understand that 70% of their sales are, more than 50% of the sales are happening outside Europe for them, even for our competitive German manufacturers. So where Europe may still struggle, but we may have opportunities in America and rest of the world. So I think that's number one. Which, like I said, the opportunities are on table. We are in advanced discussion with few of the large companies across the world, which we'll be able to share with you soon, hopefully. Number two is this energy crisis. If you read very carefully what is happening in Europe at this point of time, is quite alarming. Okay. So most of the maybe it's not coming out too much loud in the media and all, clear in media and all, but there is a serious struggle right now for the energy. While they may get energy, but the prices are off the roof. I have discussion in my last visit. I would not name anybody, but some very prominent companies who are manufacturing in Germany and in Europe, and they are really passing through tough time. This situation of war, the situation of the energy crisis, also there is one more issue which we do not address are the employment. So the labor, so they are not able to get labor to work. So they need to pay really, really high salaries to get people. They want to hire people there. So that's another very big challenge in Europe. What they are what they are facing. So I think we see opportunities, if not soon in Europe, and maybe later in Europe. But I think by the time I think we would have been able to substantially take market share of many of our major competitors.
Okay, understood. And sir, how confident you are to hit the revenue level of rupees 600 CR by the end of this financial year, sir?
What I think I'm as confident as you are. So.
That was nice. Okay. So means we can expect the quarter four Q1Q basis on better side, right?
Yeah. So if I think if you are positive and confident, it'll happen. Yeah.
Thank you. Mr. Goyal, may we request that you return to the question queue for follow-up questions. We'll take the next question from the line of Tushar from Kamakya Wealth Management. Please go ahead.
Yeah. Good afternoon, sir. Sir, I could see that we are increasing our total addressable market by entering into quad surface, faucets, and further, focusing on hoods and cooktops. So my question is, like we have now new land, we have bought a new land. In terms of the wallet share, I just want to get the quantum, like how much in the percentage term it might increase. That would be my first question, sir.
Your wallet share increases because of what? By acquiring land?
No, sir. The plan you might have with the global partner. I just want to have the quantum for the same. Like, what would be the quantum from the current wallet share which we have?
Like I said, we still have to wait for we'll be able to give more clarity after quarter 4.
Sir, sir, for next 2 to 3 years, like in terms of domestic sales, what sort of CAGR growth we are expecting in the revenue, and what would be the margin profile, sustainable margin profile?
See, our goal is, and I think 3 years back, our margins were almost half, and was EBITDA margins of exports were more than 20%. Domestic was struggling at 10%. I think Mr. Sharma able to. I think we've been able to jump back on our domestic margin side. Mr. Sharma, after my answer to you, can throw more light on the margins. As far as the the growth side is concerned, we are approximately at around annual rate of about 130 crores. So we have aggressive growth plans, and I think our plan is to grow anywhere between 30% to 50% year on year for the next 3 years' time.
So adding to that,
for the margins,
gross margins is same for domestic and export, while EBITDA margin is around 17-18%, primarily because of the A&P expenses what we normally spend. But with this our reach increasing and the brand presence, I think in years to come we should have similar margin in export and domestic on the net level also.
Okay. So my last question, like looking at our current capacity, what peak revenue we can expect from the current capacity, and what is the current utilization level for cords and steel zinc?
So on the quad zinc side, I think we have already said that with the million zinc capacity, we can reach to volume of 550 to 600 crore from the existing capacity what we have installed capacity. Current utilized capacity around 65% as of now.
Okay, sir, in the steel zinc?
Sorry to interrupt you.
Steel zinc, we have increased the capacity from 90 to 180,000 zinc, and next year we'll have the full capacity available for utilization. We should be able to utilize 75-80% capacity in the steel zinc.
Thank you. Mr. Tushar, may we request that you return to the question queue for follow-up questions. The next question is from the line of Ridhima Goyal from Equant B. Please go ahead.
Hi, thanks for the opportunity. Chirag, I just wanted to ask, like, are we shifting our focus from quad zincs to other products? Because I just wanted to know, like, what is our domestic market product mix, the contribution from the quad zinc?
So I would say, as far as the strategy is concerned, I'm clarifying it that we want to have a one-stop solution to our customers, because we have such a huge reach across India, pan India, that we just cannot afford the overhead just by selling quartz, because people want some other stuff also. So right now, if you see our revenue bifurcation, about 60% are quartz zinc and 20% are mix of, and the balance 40 is mix of 20% steel and 20% built-in appliances. And I think it has grown very well.
But this you are saying overall, right? I wanted to know particularly for the domestic market.
I'm talking about domestic only. We don't sell appliances for exports.
Okay. Yeah, that's it from my side. Thank you.
Thank you. The next question is from the line of Rushabh Doshi from Nirmiti Investment Advisors. Please go ahead.
Yeah. Hi for the opportunity. So, I just had a doubt, like, regarding our distributor and dealer network.
Doshi, sorry to
Earlier,
interrupt you, sir.
Sorry, you are not audible.
Please use the handset mode.
yeah, hi. Am I audible now?
Yes.
Yeah. So I just had a doubt, like, in terms of our dealer and distributor network, earlier, an increase in the distributor network would move in tandem with the dealer network. But now what we are seeing is that the distributor network is still at, 82, but we are kind of doubling our dealer network. So I just wanted to understand, like, how is that working out?
So currently, we are focusing more on the increasing our sales point and dealer network. And we have also planned to increase our distributor network.
No, I'm just coming back to your question, and the answer is very simple. The domestic piece of our business, we're expecting, like I said, 30 to 40% growth year-on-year next three years' time. So I think that growth can only come by the way of expansion of the dealer network, what we have planned, and by our emphasis on the B2B category.
But like, we are able to service all 3,000 which we are planning dealers through just 82 distributors, or we are planning to increase the distributor network also by a significant amount?
The distributor, the active distributor network right now is 50 plus, which would be go to 100 plus, and this 100 plus will have a dealer sub distribution networks about 400 to 500. So that they would be servicing to 3,000.
Okay. Like in one of the previous questions where the participant had asked the maximum revenue potential of the company, I guess there you didn't mention for the revenue potential for Carysil surfaces. So if you could just mention that.
Sorry, I'm sorry, you were not clear.
In the previous participant's question, where you had replied with the maximum revenue potential of the company at the current capacity, it was around 800 crores. 600 was from quartz, 90 crores was from steel, and around 80 to 90 was from kitchen and appliances. But could you just mention what is the potential from Carysil surfaces?
Carysil surface. So 800, what we discussed about the Indian business operation, and there is a UK subsidiary, our Carysil Product Limited, currently 10 million pound and
80 crores. The Carysil products is about 80 crores, and then the surfaces is about 130 to 140 crores.
Okay. Yeah. So yeah, that's all from my side.
Overall, yeah. So overall, from from the whole global piece, surface is already 15% of the business. Yeah.
Okay. So in short, we have a revenue potential of around 930, 950 dollars.
Yes.
Okay.
So I think you see our aim of touching 1,000, I think is, we are not changing that plan, or do you want to derail from it? Like I said, even the last quarter, the things are being very positive, and I think, and I feel very confident. And the year 24, we would be aiming to hit the 1,000 mark.
Okay. And like in terms of gross margins, like now we are somewhere at 49. So in Q4 or next year, like what number for gross margins are we looking at?
So I think we would not be able to give this statement what's happening. The only thing what we can say is that I think we expect the gross margins to be intact. Yeah.
Okay. Sure. Yeah. Thanks. That's all from my side.
Thank you. Ladies and gentlemen, due to time constraint, we will take that as the last question. I now hand the conference over to the management for closing comments.
Yes. As stated earlier, we believe that the challenges posted by current geopolitical and recessionary trends for our products is slowly phasing out. On a medium to long term and on sustainable basis, we see great opportunities for us to increase our penetration in global and Indian markets to have grown our business substantially. We have great product line and fundamentals of business remain still stronger as ever. Thank you everyone for joining this call. We hope that we've been able to answer your questions satisfactorily. However, if you need any further clarification or want to know more about the company, please get in touch with our team of SGA, our investment relation advisors. Thank you once again for taking the time to join us on the call. Have a great evening.
Thank you. Ladies and gentlemen, on behalf of Carysil Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.